questions from me. Somebody asking what my view is on the 10-year and 30-year bond yield. Is it going to be negative? I think there's a very good chance that the 10-year will be negative. Nobody knows for sure, but if you look at the current trends and the need for negative real interest rates, I think that's entirely possible. And I think that would precipitate a move in gold that would really just blow out anything we've already seen out of the water. Another quick question from me: if everything is being compressed in this COVID-19 crisis, is it not possible that the bull period may be steeper and shorter than the last bull market? I think it is possible that this is going to be a shorter bull market. The last one was extraordinary, some 11 years in length, and a lot of opportunities to make profits along the way, not just in gold, not just in silver and the associated mining stocks, but other little bull markets like uranium, like rare earths and base metals, et cetera, energy metals. So a lot of spin-offs. And that's what we want to see. We want to see a longer term bull run so we have time to make money and new deals coming to the fore. So it could be shorter. And that's, I guess, one of my fears for this market. I do believe, though, we're at a critical point in monetary history. There has to be some kind of a resolution for this, these successive cycles of ever easier money, ever more debt. So this cycle may end up with some sort of resolution in that regard, some kind of a monetary reset. Whether that will mean it will take more time, whether that means that metals prices will go up that much higher, remains to be seen. But hey, we live in interesting times, so it's all going to play out in front of us. Next question, First Mining. Dan, if you could address this, and this is something I was kind of wondering too, looking at your presentation, your cash, the value of Goldland/Goliath and your treasury stock seems to roughly approximate your current market cap, or you could take Goldland out and say Springpole. So that kind of implies that everything else is for free. Are we doing the math right here? Can you kind of comment on those relative valuations as compared to your market cap?
Yeah, listen, I think that's been a big surprise every time we go to update this presentation in the last month. It's, the fact that Goldland, is about $100 million of the value. And I think the one that surprises people is Pickle Crow today is, approximating the same kind of value between the project interest and the shares we'll receive and cash payments in the earn-in program. So, I think you go back to the beginning of January, Springpole was trading at about 100 million value and everything else was free. Now, Springpole is trading at about 100 million value, and you've kind of got some benchmarks for some of the other projects, but that doesn't give us any value for Hope Brook or Cameron or Quebec assets, each of which million-ounce-ish resources, most of them past producers or, have been bulk sampled, taken to feasibility. These are great projects in tier 1 jurisdictions that we're still not getting any value for. So I think hopefully we're going to start receiving some prospective value for these things. We don't have to actually be able to, point to them in terms of a market value that's there. But no, Springpole is still, as I showed on that chart, sitting at the very, very cheap end of valuations relative to its peers.
Jim, can you share any thoughts on why the market is not recognizing the tremendous progress that ValOre, and I guess by implication you, are achieving both operationally and technically with the development of Pedra Branca? And as part of this, they're asking about your major shareholder, Jangada, and if they have a block on the market or intend to sell, and if that might represent either a reason for a share price being down a little bit from recent highs and or an opportunity for people to buy at these levels.
I'll try to walk through that long question or multi-phased question there. I think that the company Jangada was presenting this project as a development opportunity when they held the project, and we've chosen to take a step back and be an exploration company like we are at ValOre. And for the longest time, we weren't actually drilling. So I think that we were taking our time to get it done right. and that was a bit of a delay, but now we are drilling. So I think you're going to get value now through news flow. I think our shareholder base likes the way that we approach projects. And so as news flow comes out, I think we'll start to garner a lot more attention and hopefully add a lot of value. Jangada actually is selling some stock, and that will be taken care of in one fell swoop very soon. They've actually filed what we call a notice of intent through SEDAR, and they're moving from a control block position to one that's below that. So that could be holding things back, but that'll be done with soon, and the wind will be at our back, so to speak.
So a window of opportunity, correct? Is that the way you'd put that?
It could be. I mean, I think if there's an overhang, certainly people, buyers are a little more hesitant. So sure, if there's a perceived overhang there, or if somebody going to sell stock and there's uncertainty, I don't think people like that very much. So once we can clear that up, we can move forward, and perhaps this is a great opportunity. Brien, thank you for that softball comment.
You're welcome. On a silver platter. The next question for David in Genesis. It seems like the high grade, and you're trying to understand the high grade, and there's a lot of room in your current resource for potential high grade. Are you understanding the controls or geological model to target that high grade mineralization? And as a follow-on to that, what's the cumulative strike length of targets 1, 2, and 3? It seems like they kind of exceed the strike length of your current resource.
Yeah, I mean, I think Brien, we're certainly we have a lot better understanding of the controls to mineralization now than we did say at this time last year. With all of the work that we've done, we've really reconstructed the model, going right back to all the original data and building it up in 3D in a leapfrog model. And we're continually testing that with our ongoing exploration work. But yeah, I mean, I guess yes, we feel that we have a lot better understanding of the controls to high grade within the main zone, in particular, where we've been focused. And yeah, I mean, that's a very good observation on the strike length aspect of it. And obviously, we don't know yet what we're going to find out in that area of target number 1 and number 2, but it does cover a substantial area, and there's virtually no outcrop there. So we're waiting with crossed fingers to get the geochem back from the infill till sampling and soil sampling that we've done there, and then we'll be able to go forward and start more invasive exploration there in terms of trenching and drilling, and then we'll get a better handle on what we're actually dealing with in that area. It's frozen again, I guess.
Your answer just shocked them.
Yeah.
Yeah, there you go. Internet instability again. Thanks, David. And one of the things very impressive about Genesis is the amazing technical team you've been able to put together. So, that data is getting a lot of smart eyes on it as you develop it. The next
no shortage of good ideas coming to the fore. So,
yeah. And now you've got money to take advantage of them too. So that's a wonderful thing. From Mountain Boy, Lawrence, let me see, where is that question? With the very short drilling season and competition for drills, what challenges are you expecting to finish all the drill targets in time before shutdown, and how are you going to address those challenges?
Well, we have 2 drill rigs lined up. We've made arrangements with the drilling contractor. They're all set to go. The rigs are there and available. So having 2 drill rigs going at the same time, we'll have September and October. That is adequate to do the drilling that we anticipate doing on those 3 target zones.
Follow up to that, Lawrence. I know that you were looking to do some more work, I believe geochem or geophysical work to understand that target where you had the 5 kilogram intersection before you drilled it, kind of confirm that you understood the geometry of the structure? Have you done that yet? And do you understand that or are confident in your understanding of where to drill?
Well, in fact, the IP is going to be done at the Wolf Moon target, which is distinct from the Mountain Boy target. We're doing a lot of structural work and interpretation of the results of the earlier drilling and the production. And a big part of it is doing the LiDAR survey, which will give us very accurate ground survey control to enable us to locate exactly where we anticipate hitting what we believe the down dip extension of that vein.
Okay, good. Now we have a question for Fred and Impact Silver. Fred, can you tell us how your operating and AISC margins are at current silver prices? As a relatively, or having been known as a relatively high cost producer, which gives you that extra leverage in a rising silver price, do you have a buffer now? Do you have a profitability buffer now, and how big is it?
Well, two things. One, the mine itself has been positive cash flow now for almost a year. So yes, we're a relatively high cost producer, but our definition of cost also includes sustainability. The fact is, right now, just about every dollar that goes above where it was only 6 weeks ago is going straight to the bottom line. And we will probably be modifying that slightly because we'll be opening up some of the mines that are marginally a little lower in terms of their margins, not necessarily grade, but the operating costs. And then the ultimate one that's going to be impacting upon us will be with the Capire, because at the current moment, when we first did Capire, the costs were running up to the point where the all-in cost was around $17 to $18. And we think that with the DMS that we're looking at right now, it'll be probably about a year down the road, but it'll be coming in at least $3 or $4 cheaper than it was. So immediate strategy is we're going to be making money. Better strategy is we're going to be making more ounces and still some more money. And the ultimate strategy is when Capire comes on, we're going to be adding a couple of 100,000 ounces with good margins at this point in time. The other side is we are starting to get, as we get into this one area where Chapinel is, there may be feed coming in there that's higher grade gold that we'll be putting into the mill as is, where is, like Carlos Pacheco is ready to, could be mined within 6 months. And that's going to improve the overall margin, and we'll have to say equivalence at least, because it means we'll be running gold as well as silver. And that means the value per ton will be going up.
Great. Thank you for that, Fred. And a question for me, what is my prediction on the US dollar? That's interesting. I really don't know. I think probably lower. People talk about weakness in currencies. They talk about it in comparison to other currencies, and they don't tend to think of it against gold. I think all the currencies in the world are being depreciated right now and will have to be depreciated, but they're all running down the hill at the same time and in the same direction. So most people, most mainstream analysts don't look at the fact that the dollar is obviously being depreciated against gold and silver because the gold and silver prices are rising. There have been a lot of theories, prominently the milkshake theory, that there will be a period of dollar strength because the dollar will act as a safe haven during the tumult ahead. And frankly, I think that makes a lot of sense, but I don't think anybody can really predict to any great detail what's going to happen. I think the one thing we do know is that we want to own gold, silver, precious metals, and mining stocks going into what's ahead. And they will be very profitable, as they have proven to be over the last few weeks and few months. So that actually takes us to the close of our session. And just to kind of reiterate that, you have to be in it to win it. And you've got to be involved in this sector. It's generating extraordinary profits. Our gold newsletter readers are realizing extraordinary profits. And that's a pitch, of course, to go to goldnewsletter.com to subscribe. But the whole sector is moving. You need to be active. You need to attend events like this. You need to use the inefficiencies of this market to your advantage. Find the new stories, the better stories, tomorrow's winners today. And we were blessed today, very fortunate to have 5 companies that I feel will be the biggest winners going forward. So please do some further research on these companies, consider their value propositions carefully. And with that, thank you so much for attending.